Welcome to the Capital Spreads Weekly Update. A very happy new year. Today is Wednesday the 4th of January 2012 and a very good start to the new year so far. Good strength from equity markets across Europe. The FTSE had a big rally yesterday, but just today taking a bit of a pause. FTSE's around 5,700. The Dow hit a 5-month high. It's currently around 12,380. There's been a bit of fluctuation for euro dollar around the 1.3 level. It's been above there this morning, has dipped back down. It's at 129.80. Cable at 156.10. Quite a bit of volatility in gold as well. That seems to have fluctuated around the psychological level of 1600, and that's where it stands at the moment. And Brent too has seen some good strength. Risk assets doing quite well so far this year. Of course, it's very early days, but Brent has been above 112. It's just below there at the moment. It's at 111.60. And there's no shortage of events so far this year. We've seen geopolitical tensions in Iran and the Middle East just causing crude prices to spike. We've seen the Dow, obviously, as mentioned, hit a 5-month high. It's well above its 200-day moving average now. And we've seen some very good manufacturing data across the board in Europe and the US, and that has really assisted this rally so far. But just today we're seeing a little bit of tentativeness as the Eurozone concerns re-emerge. We've seen overnight the biggest ever amount of deposits by European banks placed with the ECB. We've seen Italy's biggest bank, UniCredit, hit its lowest level since March 2009, and we've seen a bond auction in Germany just demand slightly higher yields. So German 10-year yields, government bond yields, are almost as high as the UK's. So a little bit of concern there. The rally so far just seems to have fizzled out for now. How are clients trading at the moment? Well, they are very much opposing the rally in equity markets. They're very short the FTSE in particular. So around this 5,700 level we've seen a lot of selling, and that selling also is in conjunction with selling in US markets too. So the Dow, clients feel has gone a bit too far so far. In currencies, clients are actually long the riskier currencies, so they're long the euro and they're long cable. They're also long gold, but they have been opposing the strength in Brent, so they've been selling Brent, and the recent move back below 112 has certainly benefited them for now. The rest of the week, there is a few important highlights for the rest of this week to keep an eye on. Tomorrow we got UK PMI services data, and that is expected to decline but remain above the crucial 50 mark, which indicates expansion. Don't be surprised if that comes in slightly higher, because of course all the manufacturing data has been surprised to the upside so far this week. We also get tomorrow US ISM non-manufacturing data as well, so this, the focus on their services sector, that is expected to rise too. So that could help things into the end of the week. But of course the big highlight will be the non-farm payroll. That is on Friday. That is expected to come in at 150,000, so higher than last month, which was 120,000. Now, initial jobless claims, of course, have been declining in recent times, and the jobs market in the US does look quite strong now. Unemployment fell back from that 9% level, so this number could really help spur those markets higher. So that brings us on to the theme of the week, and really the theme this week is, if we can maintain this strength in early January, will that translate into strength for equities throughout 2012? It is of course too early to say, but when you see good strength in early January, or in January as a whole over the month, that can tend to mean that markets will end higher for the rest of the year. Of course, there are severe headwinds, as we've seen last year. They continue into this year, but there is every chance that, historically speaking, that if January is positive, then we could possibly see a positive year for 2012 for equity markets. That's it this week. As ever, do give us feedback, media@capitalspreads.com.